In this video, I want to show you how one CPP credit is worth over $16,000. This video is going to give you an interesting insight into how the Canada Pension Plan works, and specifically how valuable those contributions are to you right before retirement. In this video, I'm going to walk you through how much one CPP credit is worth right before you retire. This is one of the things that I love about retirement planning. This is one of those fascinating insights that might cause you to look at your retirement plan differently. You might reconsider the way you're approaching retirement planning based on the insights from this video. Now, next, I'm going to walk you through these steps to determine how much one CPP credit is worth, why it's worth over $16,000, and once you know how the formula works, you can use it to your advantage. Now, my name is Owen. I'm an advice-only financial planner, a CFP, and I'm the founder of Advice. Advice is an easy and powerful retirement planning platform that you can use on your own. It's just $9 a month or $49 for the year. If you don't have a retirement plan, we would highly encourage you to get one started. Let's start by walking through how a general pension calculation works. That's going to give you a good idea of how the CPP calculation works. Now, typically a general pension calculation is based on your best 5 years earnings. It's typically multiplied by your years of service. More years of service means more pension benefit in the future. And typically there's a factor. You get a certain income replacement percentage for each year of service, and that's the pension factor. That gives you your pension benefit. Let's go through an example here. Imagine you have $100,000. That's your best 5 average earnings. You've got 10 years of service and your pension factor is 2%. That would give you a pension of $20,000 per year. If you added one more year of service multiplied by the pension factor of 2%, you'd get $22,000 per year. You get an extra 2%. So that means 1 year of service is worth $2,000. And we can use the same thing to determine how much 1 year of CPP is worth to you. Now, to figure out how much one CPP credit is worth to you, we actually need to look at 2 different calculations. CPP is split up into the CPP1 and CPP2 benefit. We've got the old base benefit and the new enhanced benefit. So let's go through and figure out what one CPP credit is worth to you in these 2 different benefits. For CPP1, we look at the year's maximum pensionable earnings. We actually look at the best 5. So this is the last 5 years, the average of the year's maximum pensionable earnings. CPP has a 25% income replacement target. That's the base benefit. So we multiply that by the 25% income replacement target. And then we take 1 credit. So we're going to take 1 year out of the 39 years you need to get the maximum CPP at age 65. So 39 years, it's almost like a pension factor of a little over 2.5% per year. That gives us a CPP1 benefit of $426.80 per credit. So per CPP1 credit, you're getting $426.80 per year for the rest of your life starting at age 65. Now let's go through the CPP2 calculations. There's actually 2 pieces to this. There's the first additional and the second additional. For the first additional, we take the same average year's maximum pensionable earnings. We've got a income replacement percent of 8.33% on that first additional CPP2 benefit. And we have 1 credit. But for CPP2, we need 40 years of contributions, not 39, but 40 years of contributions. That's like a pension factor of 2.5%. That gives us, for the first additional, 1 credit is worth $138.65 for the rest of your life. So every year for the rest of your life, starting at age 65, 1 CPP2 first additional credit gives you $138 for the rest of your life. Now let's go through the second additional. Now the second additional has a higher income threshold, and that higher income threshold at the moment's about $9,000 above the average year's maximum pensionable earnings. So that gives us a calculation. We've got $9,260. That's the incremental income. We've got an income replacement percent of 33 1/3%. We have 1 credit out of the 40 we need. So again, it's a 2.5% pension factor. And that gives us a value of $77.16 per year per credit starting at age 65 for that CPP2 second additional contribution. So when we add that all together, we've got a first additional and a second additional. We've got $138, a little bit more, $77. that gives us a CPP2 credit of $215.81 per year starting at age 65. Now let's take a look at the total now for CPP1 and CPP2. We've got $426.80. For CPP1, we've got CPP2, $215.81. That means when we combine, one full CPP credit is worth $642.61 per year for the rest of your life, starting at the age of 65. Now, if we use the 4% rule, we can figure out what we need in net worth, registered assets, to replace that same amount of income. So we take $642.61, we divide it by the 4% rule, and that gives us the amount that we would need in a registered account to equal what one CPP credit is worth to you at the age of 65. And that's $16,065.25. So that means if you earn one CPP credit right before you retire, it's worth the equivalent of $16,000 in net worth in a registered account. Now, the interesting thing about this is how much 1 year of extra work is worth to you. Now, we did a video a little while back on the golden handcuffs, the effect that working one more year has on your retirement plan, and CPP and the credit that you earn is one of those factors. Now, there's additional factors as well, of course. So if you work an extra year, that means you're delaying withdrawals. If you work an extra year, you're probably still contributing to your investment accounts, so you're investing more over that year. You're also getting the investment growth over that year as well. But that CPP credit is worth quite a bit right before you retire. And that's because you're putting money in, but the following year or a couple years after, you're going to be getting that money out right away. So unlike you contributing in your 20s, where you have to wait quite a long time to get the money out of CPP, right before you retire, if you earn a full CPP credit and then retire the following year, start your CPP benefit, that's very, very valuable to you. Now I want to show you what this looks like in a retirement plan. So we've got this retirement plan. We haven't added an extra year of employment income quite yet. So we can see the sort of results here, and we'll do the compare analysis after. But if I go down here, let's add in Jennifer's income. We're going to open up the columns here with the arrow. We're going to add just a few months more of employment income. So maybe it's 9-10 months into the following year. We're going to add $85,000, which will get one full CPP credit, including CPP2. And we're going to end up seeing CPP go up because we're going to get all of those additional payments over the course of the plan. So we're getting quite a bit more from CPP. We see success rate go up. We see after-tax estate value go up. We could probably spend more in this plan as a result as well. If I go to the compare section, we can see here, so it's pretty much the same until we get that extra 9 to 10 months worth of employment income. And that just compounds over time. So by the time we get to the final estate value, we've got over $250,000 more in that scenario than we did in the previous scenario, just by adding one extra year of employment income. And down here in the summary, we can see some of the benefits there. So definitely for CPP, we're getting more CPP benefits over the lifetime of the plan. We've got a long retirement period here, so there's lots of additional CPP that Jennifer would get just from that one extra CPP credit. So if you're thinking about retirement, if you're approaching your retirement date, and you maybe want to pad your retirement accounts, pad your retirement income, think about how much that one CPP credit is worth to you. You might be surprised at how valuable one CPP credit is in your retirement plan.